Trading Nut, episode 179.
I'm not going to do something that I don't like. Find your style. You know, I prefer the 1 in 5 minutes, and people say, oh, I can't trade that. And I'm like, okay, if it doesn't work for you, try the higher time frames. And that's what I would say is, yes, it's good to take advice from people, but do what you feel comfortable doing.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of Trading Nut. I'm your host, Cam Hawkins, and today I want to tell you two things before we get into the show, so please stay tuned for them because the second one is absolutely epic and I know you're going to want to hear it. But before we do, I want to tell you about my guest. My guest today is Jamie Palmer. He's a Forex trader from the UK. Got a fantastic story to tell. There's so many lessons in here, folks. I took so much away from this interview, and I know you are too. Look, he didn't start off in Forex, though. He started off in binary options. So if you remember that stuff, I don't even know if it still exists. But anyway, he started off there. He moved into Forex. He trades on real low time frames and uses an indicator he created himself. You're going to find out all about that and how he makes his regular withdrawals, got his dream car, and had a crazy winning streak. You're going to find out how long it went for in the interview and in the video we shot after the show. So that's coming up in a second. But before we get into that, I do want to tell you about these two things. So the first one is the Trading Nut Funded Cup. I've been saying that it's coming. The second one's coming in June. It's now June. It's actually been postponed until July. So please stay tuned for more details on that. You're going to see an ad pop up in a second. Also, we've announced the winners. There is a video, a live stream there. You can go and check that out over on the site where the winners are announced. So congratulations to Steve Young. Well, I'm actually going to get him on the show as well in the future. So I'm going to be recording an interview with him in a couple of days. So can't wait to hear how he managed to get, I think it was like 94% with the Trading Nut Funded Cup. Now, this is the big thing. This is the big thing I want to tell you about. So I'm doing something new here next week on the Trading Nut. Well, with Trading Nut, it is a complete new thing, a concept that sort of came to my mind. And I thought, hang on a sec, why don't I do this? And I think it's awesome. I think it's really awesome. So, I've got a sponsor, right? City Traders Imperium. They offer funding challenges to get funded as traders, as do many other companies out there. Now, one of the things that I do is I build trading robots, and I do one every single month for my members as part of the Robot Lab. But this time we're going to do something a little different. We're going to try and build it so that we can pass not just a funding challenge, but also pass and withdraw from one. So that's the idea. And it's a 3-day live streamed event. The price point is really cheap, so you guys will be able to afford this. It's a 3-day live event, and it's called the Algo Funder Mastermind, which means I'm going to build you guys a trading robot, and we're going to use our combined knowledge. So everyone that attends, along with 3 expert traders that I'm going to pull in from the show, to come up with a strategy that can be dynamic enough and will make it dynamic enough so that you can create your own entries and exits so that you can avoid any limitations with funding programs around copying, trades that perhaps robots are taking. So we're going to do that. It's going to be a 3-day live event. You guys can join up to that. It's all over there on the Trading Nut site. You'll be able to find it. I'll make sure it's easy enough to find on tradingnut.com. Look on the sidebar, look in the top nav, look everywhere, you'll find it, or there'll be a link in the description here, or on the podcast, you'll be able to see a link in the description. So, folks, hunt around for it. It's called the Algo Funder Mastermind. And the price point, as I said, it is cheap as chips. So for 3-day live events, so we're doing 3 sessions, 1 each day, and then I'm going to build the robot out, and I'm actually going to be building it along the journey, and so you guys are going to start to see in that 3-day event how this thing is starting to come together, and we're going to tweak it and that sort of thing. So anyway, the price point is $33 a day for 3 days, which works out at $99. So guys, if you want to get involved in that, take part in that, it's going to be awesome. There'll be a link below this video or in the podcast description, or you'll find it over there on tradingnut.com. All right, enough from me. Let's get on with the show. Folks, if you missed out on joining the Trading Nut Funded Cup, don't worry. With over 3,000 traders registered, my sponsors City Traders Imperium have decided to run another, but this time they've promised the prizes will be even bigger and better. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before mid-July 2022 and get 10% off any City Traders Imperium product just for entering the competition. Good luck, folks, and we'll see you in the cup. All right, folks, here we are on Trading Up. We've got Jamie Palmer in the house from the Binary Destroyer. He's got quite a different story, or kind of story, I think, from a lot of my other guests. So I'm really pleased to have him on the show and get to hear the story, how he went from binary trading to Forex trading. So, Jamie, welcome to the show.
Thank you for having me.
And how are things over there in Leicester? Sunny, heading to summer?
Yeah, we're heading in summer. It's pretty nice weather. We didn't win the Premier League this year, so I'm a little bit upset over that. But yeah, it's okay. We're getting in summer. I've just recently moved house, so just settling with there. Getting ready. No holidays planned at the minute. So
cool. And you were lucky enough to get to New Zealand just before the pandemic hit, which we discussed before the show.
Yes.
And the country's been in lockdown ever since we're finally allowed to leave. Now, we're going to start off by finding out about your story, your journey into trading. So how on earth did you get started?
So I started probably about 8 years ago. So before I got into trading, I did a lot of kind of Amazon, eBay businesses, kind of buying and selling on there. And the one thing I've always been fascinated was stock trading, the foreign exchange, investing. But obviously back then it wasn't as big as it was, and it was hard to kind of, get into that kind of thing. It was more exclusive to, traders down in London. And I was scrolling through Facebook one day and I met a young guy, and he'd driving around in some expensive car. And I was like, well, what do you do at that age to afford that? And he said, I do binary signals. And I was like, okay, that triggered my interest. What is this? If you've got that, then I must be able to do the same. And then that was it. I got involved in the whole binary options, signals, account management. And like most things in binary, just lost money. I was just funding, putting money in a trading account, signing up through brokers, and I was just losing money every single month. And I thought to myself, there must be a way around it. There must be actually be able to learn the charts. And that's where it kind of started from then, kind of going into more in-depth, learning about the charts, about candlesticks, trends, support, and resistance. And obviously you mentioned about my indicator, the Binary Destroyer. And when I was learning a lot of price action, I thought I need some structure on my charts. I need to be able to see what, where price is. Is it overbought? Is it oversold? Is it a downtrend? So I built an indicator, the Binary Destroyer, and I used to use that to trade. It was kind of guiding me on possible setups with binary. And obviously I had I went down 2 years of doing that, and, I'd make a bit of money, I'd blow the account, and make more money, blow the account. And my biggest with binary is staying consistent, because the win ratio is terrible. You win, you're losing more than you are winning. And over time, started getting there, and I started making consistent profits. But my weakness, especially back then, was always consistently blow an account. I'd gain 20, 30%, and then I'd lose 20. And then I'd build it back up to 30, lose 10. And that's kind of where I was. And obviously then a few years later, they brought in the regulations with binary. Binary started getting banned in the UK. And that's kind of when I made the switch to Forex, because I thought, okay, I've got the experience now. I want to start taking it to the next level. And that's when I started getting involved with Forex trading, started following a lot of big traders. And I was like, okay, well, this is it, because you can see the rewards they're getting, 1 to 5, 1 to 10 risk reward ratios. I'm sitting there going, wow, this is a completely different level of trading. And that's kind of where I was. Now, my style of trading is scalping. So I prefer the 1, 5, 15-minute time frame. So what I learned, even though binary was kind of made a bit of money, but it was more of a learning curve, the style of trading itself, fast pace, was what I enjoyed, because the good thing about binary was it taught me about candlesticks. You had to enter on a certain candlestick, because with Forex, it doesn't really matter if your entry point's slightly off, because you put your stop loss up there, your target down here. With binary, it's either you're winning by a pip or you're losing by a pip, within 30 seconds. So it was more about precision entry points. And what I took from binary, I put it into Forex. I thought, okay, let's just switch it up. Can't trade binary anymore, it's banned, whatever. I'll switch over to Forex, go to the 1 5-minute time frame. And I learned about, okay, well, this is where I'd normally enter a binary. And from there, I got really kind of more accurate with my setup, especially on the 1 and 5 minute with Forex. And I've kind of stuck with that style of trading ever since, scalping 1 to 1, 1 to 2, 1 to 3 risk reward ratio. Because obviously you mentioned before this that you're more of a swing trader, going for 1 to 10s and stuff like that. But I think for me, my style of trading is just short, fast pace. I'm not a trader that wants to hold trades for long periods of time. I like to just do my trading, get in, get out, and then that is it. If I have a good day, it's great. Turn my computer down, walk away. And that's kind of really where I've been ever since. I've kind of stuck with that style of trading ever since, that fast pace in and out. That's kind of where I have been. That's kind of a bit about my story.
And so, got a couple of questions on that. So were you working, so you talked about Amazon and eBay, sort of side business. So did you have the side business while you were doing the trading, or were you working a day job?
Yeah, so obviously I still worked a day job, but I was like, I want to get out of this kind of rat race. I want to get out of a day job. So at night I would buy stuff on eBay and then sell it on for more. Same with Amazon, a bit like drop shipping. And it was great, but it was just saturated market. Everyone's doing it. And it was, then I obviously met this guy and he piqued my interest. I thought, wow, what are you doing at that, to be able to drive one of them cars at that age? And that's kind of when it took me down to, binary options, Forex trading. You do a quick Google on that or YouTube and there's hundreds of thousands of videos. And I was like, wow, what is this? I want to get into it. And
so
that was it.
How did you work your job around the education side of it and the practice and stuff? Because I'm guessing, your London session happens during the daytime in London. So
yes, it does. Yeah.
How did you do that?
So I do most of my trading kind of late afternoon, evening. Now, this is interesting, because when I first got into trading, I decided there and then that is it. Like, I'm not giving up until I'm successful at trading. And for the first few years, it was very hard. And it was a very kind of dark time, because you fixate so much on wanting to trade. You get up in the morning, you're looking at, because I used to work 6 till 2 and then a 2 till 10 shift, rotating every week. So if it was on the 6 till 2, I would trade the afternoon. If it was on the 2 till 10, I'd trade in the morning. So I'd either be in the London session or London close into New York session. But that 2 years was very kind of, all I cared about was trading. I'd watch YouTube videos. I'd fall asleep watching YouTube videos at weekends. I wouldn't see my friends. It was a very difficult time, because, especially when you work in a day job and you're trying to trade, it's finding the time. You're racing home from work, to trade, you might get some setups, you might not, and sometimes you feel a bit disheartened. I've sat here for 3 hours, nothing's happening, what's going on? But yeah, those 2 years was, especially when you work in a day job, is difficult learning to trade because, you're spending so much time on trying to be on the charts, trying to learn new strategies.
And were you back testing at all, or were you just literally live?
No, so I use a simulator now, but back then I didn't do anything. It was just spending a lot of time looking in front of the charts. And if I'm not on the charts, I'm watching YouTube videos, and it was just, sometimes you feel like you go around in circles because, it's like, weirdly, there's this concept where, if you want to be a full-time trader, you're getting out of something, you're getting out of your day job. But to be a full-time trader, you got to put everything in. So you find yourself, you're doing more time, you're working a day job, then you're trying to learn to trade. And it's just, it's relentless. So yeah, but very kind of difficult time in the early days of trading, because I can relate to a lot, a lot of people say, when is the best time to trade? Do I trade in the morning? Do I trade at night? And I say, but I think at the start, nothing beats chart time. The more you spend on the charts, the more you're going to learn, not necessarily watching video. I wouldn't say any particular videos kind of changed me, but just the more you spend on the charts, the more you're going to learn. You're going to pick up things. You're going to see how the market works. You're going to see how you react at certain points. And I would say, that's kind of what I focused on, was just every given chance I could spend time on the charts.
And because you were like down on the lower time frames, 1, 5 and 15-minute charts, I mean, did that help you because you got to see more chart than, for example, somebody who was going to be trading a 15-minute entry strategy only? And
now you mention that, I'd probably say, because I don't think, you've either got two sets of ways. When I was going home from work, I used to trade the 1 and 5 minutes, which was good because you're getting a lot more setups. It's moving every minute. When you're trading more the 30, the 1 hour or 4 hour, I don't think that style of trading is you can't just come home from work and just stay at the 1 hour chart for 3 hours because you're only getting 3 candlesticks. So, but obviously I think if you're trading more the higher time frames, it would be check your analysis in the morning, at lunchtime, at night. But I would say definitely learning the 1 and 5 and even the 15 helps you for the higher time frames, because it's the same concept. You learn about the candlesticks, you see how they react and move at certain levels, and you would just move that over to the higher time frame. You can see, okay, this is on the 1 hour. Well, it's roughly the same that's happening on the 5 minutes. I can see the engulfing candle, the rejection wick. And so yeah, when you mention that, I think definitely in my early time of trading, the 1 and 5 and spending a lot of time on the charts helped me, because then you can relate that to other time frames.
And how did you like sort of I suppose take that time and make it like worthwhile, i.e. not sort of like I'm sitting at the charts, I'm doing it now, yes, here we are. How did you make that worthwhile so that you things got ingrained in you, or you remembered things, or you created this approach?
Yeah, I don't see the first two. It was difficult because you race home. It's like, I've won a few trades last night. I'm going to go run home and do the trading again. And it's difficult because you don't know what's going to happen on the charts that day. You don't know if it's going to be flat. You're going to make, going to lose money. You're going to make money. And it was a very difficult time. It was only really a few months, maybe even a year, I started to actually notice. I remember I had a laptop and it was connected to my TV because the laptop screen was broken. And I'd drawn a support line, and I watched price come down to this support line and bounced off it. And it was at that moment, I was like, oh my God, like it's working. Like what I've learned to be able to draw a line on my chart, watch price come to it and bounce off it. And I thought, that is it. It's right there that I was like, okay, you can actually, learn this. You can actually predict the market. But I think it's moments like that where like, because, if you look at trading every day, it's going to either be really good or it's going to be heartbreaking. But I think if you look at the bigger picture and think, hang on here, it is actually making a difference spending time on the charts, because trading is like a roller coaster. Monday, you do your trading. Wednesday, you think you're rich, and then Friday, you're poor again. But I think if you look at it as a whole and think, hang on here, what am I, have I actually learned? I think if you spend a lot of time learning the charts every single day and improving over time, you'll step back and think, hang on here, I am actually getting better as a trader.
So if you had to have give advice to yourself back then, now that you're sort of, a few years on from that, what would your advice be?
Don't follow signals, don't follow account management, anything like that, because, a lot of people get into trading and obviously they don't find a lot of time, especially working a day job. So they think, okay, well, I'll just get signals or get an account management or someone to do it for me. And when I first got into trading that first year, it was horrible because like you've spent a year trading and not actually learned anything apart from just following signals. So back then I would say focus on yourself, spend more time on the charts learning and less time kind of not so much watching other traders. It's good to be, watch other traders and be inspired by them, but you're on your own path, you're on your own journey. And it's, the amount of time you spend on the charts, I would say is priceless. Don't sit there and, try and learn every single strategy. I think focus on what works for you, your style of trading. If you ask me to swing trade, right, I get swing trading, but it's not my style of trading. Holding trades for me I don't like it, right? And I'm not going to do something that I don't like. Find your style. I prefer the 1 in 5 minutes, and people say, I can't trade that. And I'm like, okay, if it doesn't work for you, try the higher time frames. And that's what I would say is, yes, it's good to take advice from people, but do what you feel comfortable doing. So that's my bit of advice I would say for myself is that, focus on your own path, what you want from trading, and spend the time learning on that rather than kind of, because you see some trader and you think, wow, what is he doing? And then that is it. You end up in a cycle of trying out new things. And I think it's just, you spend a year learning nothing, just going around in circles. It's horrible.
So I mean, it's good advice. It's great advice, in fact. Like going back to this indicator that you created for yourself. First of all, like, why did you decide to create one? And then, what gave you the idea around it? And then, how did you go about sort of adding things to it? And did you have to? And what was the iteration process like?
So when I first decided binary signals weren't going to work, I wanted to go down the route of learning to trade. And I followed a guy named Lewis Hall. He doesn't trade anymore. He gave up. And I followed him on YouTube, and he used an indicator trading binary. And I used to watch it, and I think, wow, like, what is an indicator? This thing looks fascinating. And I joined his Facebook group, ended up buying his indicator, and a very good trader. He'd do trading sessions every single day. And I used to, back then when I was a beginner, I used to watch him trade, and he would consistently make profits with binary using the indicator. And I thought, that's the structure that I need, because I was trying to learn price action, but it's like, it's trying to put a needle in a haystack. It's like, you can't, where's the structure? And that indicator gave me the structure, and I thought, that's what I need. So I ended up joining him for about a year, learned a lot about money management, patience, discipline. And then he decided, I'm going to give up at trading. He ended up going traveling the world, shut his Facebook group down, YouTube channel. And I was like, okay, not to worry. I know how to trade now. Went off, didn't make a single bit of money. And then I thought, okay, I need to build my own indicator. And then I built the binary destroyer. Obviously, back then it didn't look like it did today. And that just helped guide me on what I was looking at on the charts. So my sole trading style is price action. It's what I trend trading, breaks, break and retest, support and resistance, high and lows. But the whole point of my indicators, it guides me, is when I get a setup, I look at that setup and go, okay, is this a setup I want to take? Is it with the trend? What's the market telling me at that time? And that's where I've been ever since. I've never changed my trading style from that, because I believe if it works for you, stick at it. People might tell you differently. People might give you, but what, like you said, but you could have got more trades in that time by doing this. And it's like, no, but this works for me and I'm going to stick at it. And that's kind of been what ever since, because obviously with indicators, I think it's very controversial. Some people like them. People say they lag. Some people are like, well, I'm just price action. But I think for me, it gives me the structure that I need on the charts. I can look at a chart and just go, okay, well, I've got a couple of setups. What's happening? I think the hardest point, especially when you've got a blank chart, is finding setups. Putting the levels on and trying to go, okay, what's the chart telling me? Where with an indicator, it's adding that already for me. It's my job to filter out the setups that it's giving me, which ones do I want to take and not take. And that's where I've stuck ever since. I've not changed it. I've always I guess I'm an old school trader. I'm just going to stick at that. That's my style of trading, and I'm not changing it.
And how did you sort of come up with the I suppose the format of the indicator, what it displays on the screen, and because I think I don't know if I've seen the latest version what you've got there, but it looked like there was a couple of lines, like a channel kind of thing with 2 lines at the top and 2 lines at the bottom, and then some arrows.
Buy and sell zones. So we have an upper level, which when price enters it, we take a sell, price comes down. So it's almost like a channel and a range. But over the time, as I started documenting it, making YouTube videos, sort of teaching people, new traders, we've got a lot of experienced traders, they added their little touch, going, hang on here, Jamie, if you try this, or you add this in, it helps. So over time, me and obviously my members, we adapted it, different styles of it, different strategies within it. If you're a trend trader, we'd change the settings. And that's kind of really been where it's been. I've always stuck, when I first traded it, it looked nothing like what it did. It was literally just 2 lines and a star, which was telling me when to enter. But over the years, I've had, new traders kind of join me, and they've kind of said, you know what you need to add this, you need to change that. And it's been adapted ever since. But realistically, my style of trading has never changed. It's always been the same.
And so there's no, obviously without giving away the IP, but there's no magical formulas in there or anything like that you've come up with, some mathematical calculation, or is it more like I've added these indicators together and a bit of price action? And
well, that is it. So I'll give you an example here. A support line is a support line, but when you got a support line with the market overbought, it's giving you more possibility. When you get the market overbought at a support line with an engulfing candle, it's giving you more of a possibility. So that's how the buy and short is created. One of the strategies, the Mogwai strategy, is based around 2 RSIs crossing over each other. So when I look at a support line, I know when I get a Mogwai arrow that the RSIs are oversold. I know it's at a support line, I can see it. And then I have a MACD as well. Well, when I see the MACD crossing back over, I know that we are potentially reversing into an uptrend. And that's kind of what it's kind of putting all the factors of trading together to give me a setup. And then I look at that and go, okay, is that a trade that I want to take or not trade? But I wouldn't say there's any magic formula with it. It's not just some secret recipe. It's just putting all the probability of winning a trade in your favor at one time, and kind of going over the setups that it produces.
And so, with your trading, how many instruments are you trading? What instruments do you look at?
So I stick to the majors currency pairs. Euro USD, USD CAD, Aussie US dollar, and recently I've been trading a lot of gold. Because I just like the way gold moves. I think it moves a lot more. It's more volatile. But yeah, I mostly stick to those currency pairs, the majors and gold. I think they work the best. especially in the UK with that kind of trading. Obviously, I suppose you would be trading more the yen pairs, wouldn't you, over there?
During the Asia session, the yen pairs, but obviously I'm awake for London as well, so it's not too bad.
But yeah, I mostly just stick to the majors. I think that has the most amount of movement, especially like, you know, if you haven't got a lot of time to trade, you want to be trading those pairs that are moving the most. So that's kind of where I am with the majors and gold. I've been recently, especially the last year, I had a member message him, you know, we have a trading session every Sunday and he was trading gold. And I was like, okay, well, I need to trade gold. It was the only time that I've changed my style of trading. I'll trade gold and I like the way gold moves. I like that. And I kind of stuck with that really for the last kind of 6 months to a year. I've been really hammering gold. I think if you stick to one currency pair or asset, you start to kind of not become one with it, but you start to learn. You go, okay, it's been in a downtrend for the past week. I can see that. So we're looking for maybe a possible reversal happening. And I think if you focus on them, you become better. You know, I think a lot of traders try and learn 30 currency pairs at once, you know, and it's a nightmare, you know, because it's like you don't know what any currency pair is doing any particular time. So at tops, I'll probably focus on maybe 5 currency pairs and gold.
And what about other members? Are they trading anything else with your?
Yeah, a lot of them trade indices, stocks, which is good. We have a lot of members from around New Zealand, Australia, which tend to trade the yen pairs. But I've kind of, you know, from my side of things, it's like I try not to get distracted by other people, you know, because, you know, people say, oh, you want to try this or you want to try that. And it's like, no, because you're going to distract my own trading as well if I start changing. Focus on, I've always stuck to the major currency pairs and gold, really. That's kind of where I've been.
And down on those lower time frames, are you conscious of spread, commission, that sort of thing?
Yeah. So especially with gold, you know, I mean, typical spread on gold is around maybe 15, 20 pips. But obviously, I think if you're down to lower time frames, you've got to factor that in, that you can't really be trading massive lot sizes because the overall spread is massive. But the difference between time frames is not necessarily the entry points or the strategy, it's your target areas. You know, if you're trading a 1 minute time frame, your target's going to be maybe 20 pips, you know, but 20 pips on the 1 hour time frame is unrealistic. You know, you want to be targeting the 100, the 200 pips. So the actual entry points stay the same. So if I've got a setup on the 1 minute, it's the same entry point as if I had the 1 hour. But the difference is the target areas, the stop loss levels is different on multiple time frames.
And talking about, sorry, I suppose a typical trading session, I mean, how many trades would you take?
So I trade Monday to Thursday. I don't trade Fridays. Weirdly, somebody back there, I can't remember, told me don't trade Fridays because it's the worst day. So for some unknown reason, I just don't trade Fridays.
Plus you get a 3-day weekend as well. So.
Oh yeah, that's it. My trading finishes Thursday. But yeah, Monday to Thursday, I trade either the London Open, well, not London Open, just after London Open, or I trade late afternoon. And the reason why I stick to those is because when I was working a day job, those are the times that I traded when I had a day job. So again, I've not really changed what worked for me. So I've just stuck there. I'm either getting up in the morning, I'll look at the charts. What I'll do is just have a quick look at the news, see what's happening. And then I will load up my platform, which is MetaTrader 4. I'll have the major currency pairs. And from then, you'll be able to get a rough direction of what's actually happening. And yeah, obviously in the afternoon, same again. A lot of movements has happened during the day in London Open. So I find late afternoon is more prices starting to settle down and starting to trend in a particular direction, because you'll get London Open, it'll be ranging during the Asian, and then it will spike out. And then for that day, Euro USD could be in an uptrend. So when you come to trading late afternoon, it's like, okay, I can see it's in an uptrend. We are possibly perhaps pulling back and then looking to maybe take it long in the market.
now you talked about like back in the day, you blew quite a few accounts, and you obviously got to the point where you didn't blow an account. I mean, how were you going about funding accounts that you blew, and were they like horrific blows or not too bad?
Yeah. So when I first wanted to trade, I was fixated on trading. I actually ended up splitting with my ex-girlfriend because she said, all you're obsessed with is trading. And I used to lie to myself because every single month I'd fund my trading account. I'd work a day job, and I'd put them in a trading account. And I was lying to myself, and I was lying to other people by saying, I'm making money in trading. Well, reality was I wasn't. I was just putting money into something that I was losing. And after about probably 2 or 3 years, I learned enough to be able to make profits. So I was like, okay, I could find winning trades, but the weakness was consistent. It was just like, I was going 10 steps forward, 5 steps back all the time. It was like I could make profits, I could make money, but my weakness was losing it. I was just losing it again, and I knew that, okay, I've had a good week, I've had a good month, but eventually something's going to happen. And over time, I went from blowing accounts to losing 80% of my account, then 60%, and then 20%. And I was like, okay, when I started trading Forex, is bring that stop loss down to 1% risk. I think if you go straight in 1% risk, as a beginner, it's near impossible because your entry point's got to be perfect, but you're not that good of a trader to get a perfect entry point. So, I went from having a 20% stop loss to a 15% stop loss to a 20%, to a 10% stop loss to a 5%. And that's kind of how I started to become consistent. Was I could make consistent profits, but when I got a losing trade, I was losing 20%. Okay, so let's bring that 20% down to 15%. So next time I lose a trade, I'm only losing 15. And then bring that 15 down to 10. And then ultimately the goal is 1% risk. And that's kind of how I slowly started to be consistent with my trading, is that I turned a good week into a good month, then a month into a 6 months, and then a year, and it'd be like when I was losing a trade, I was losing 2 or 1% at most, but it's okay because I've gained 3 or 5% in a week. And that is it. But it's good that you touched on that, because one of the difficult things for me with trading was when I became consistent, because the feeling of blowing account is disheartening, depressing. But what I didn't really kind of factor in was what it's like to actually start making good money with trading. That was the hardest part for me, because, when you blow account, you spend about a week just not talking to anyone, depressed. But that feeling of making good money with trading, looking to go, hang on here, this is something I could do full time. I could actually quit my job. It was a feeling that I hadn't actually factored in. People tell you what it's like to lose money or make money, but actually being in that situation was a very difficult situation for me, knowing that, hang on here, I can quit my job. I can do this full time. Can trading pay for my bills? That pressure of, I've got a mortgage, am I going to be able to trade and do it? And then I remember in my first year of making good money in trading, I'd done like 5 times what I'd done in my day job. And, it was such that feeling of, I feel invincible now. I feel like, empowered. I can do what I want. And it was a feeling that I had never experienced before. And it was a very difficult time, because it was trying to handle that. When you spend so much time learning to trade and you want nothing more. And then when you get to that stage, it's like, it's a different feeling, and it's something that I couldn't handle.
I mean, was there a figure that you had, like, was it a month, like a winning month that you had, that you were like, hang on a sec, this is enough money for me to quit my job, or this is how much I made during my job? Was there a figure there that you were looking at?
So when I decided I was going to quit my job, I was earning minimum wage. I mean, like probably about $20,000 a year.
US
you know,
dollars or yeah.
Yeah, be about £20,000 in UK. And, you know, I was doing probably £5,000 a week. And I thought, well, I can do this full time. But for about 6 months, I didn't, because it was like, is this even real? You know what I mean? It's like, it's that jump from quitting your job, doing it full time, having that pressure of, okay, I need to get some structure now. This is going to have to pay for my bills. This is in my life. I've got to be able to make sure that I could, you know, consistently do this. And when I did quit my job, it was such a, like I mentioned before, it was such a weird sensation because I'd had all this time, I was trading, and to be honest with you, I couldn't handle it. I couldn't handle it because, you know, what you spend so long learning to trade, and when you get there, it's a very surreal feeling. You know, you spent 2 years of blowing accounts, of being depressed, and then you start making money, and it's the complete opposite. And it was just a sensation I couldn't handle.
So, like, just to try and put it into perspective, like $5,000 a week, pounds a week is a you know, good chunk of change for somebody earning 20,000 a year. Now, what kind of investments did you need to have, or account balance did you need to have to make $5,000 a week? Was it significant? Did you have to build it up over a long time, or? Yeah,
so I built it to around 50,000, and then I built that to 100. So the way my trading style is a $100,000 trading account, and then what I earn over that. So if I earn 1,000, and if I earn 20 grand, I would take that account back to 100 grand. So I always start every single month pretty much with 100 grand. I build it up, and then I take it back to 100 grand. And that's kind of where I am. And then I use that to invest into other things, because I always have that inkling in the back of my mind where it's like, I don't just want to keep all my money in a trading account. Because, you know, I'm sure that you've met some big traders that will want to go big. They want to go £1 million, you know, 2 million, 5 million. And it's great. But for me, it's always kind of, I'll stick with what works for me. It's like, I think going from a £100 count to £1,000 count is a big step. But then from there to 10,000 to 50,000 to 100,000 is a lot to do with emotion, handling the money. You know, I don't want to be in a trade and I'm sitting there going, bloody hell, man, I'm in $100,000 trade, you know, drawdown and panicking and, you know, taking it to that next level. Because you see some traders that it's like, yeah, I want to compound my account from, you know, $1,000 to 500 grand in a year. And it's like, okay, we'll take baby steps. You know, if you can't manage £1,000 account, how are you going to manage 500 grand? You know, it's a completely different ball game. So I've always the way I did was, when I started making consistent profits, I always kept it to around 100 grand. And what I make over that, I would draw it. And I always keep that in the bank just as a safety net, you know, and I've always kept it like that. So 100 grand in the bank, 100 grand in my trading account. And then what I make on top of that is kind of what I spend.
And so can you remember the last deposit you made to get to that 50 grand?
Good God. Probably about 3 years ago. I mean, recently with my YouTube videos, I've been starting to build up small accounts. A lot of kind of my members have said is, okay, you know, you've got a large trading account, but how does that benefit me? You know, show me how to get to that level. Show me how to compound account, because it's easy to say, you know, I wouldn't say it's, if you can control the motions of trading with big money, is when you get to that level, it's quite simple, because, you know, even if you have one trade, that one trade could pay for your entire bills for the month. You know, when you've got a small account, it's not like that. You have to build it up. So recently I've been funding small trading accounts and kind of showing my members how to build it up slowly, how to compound it, you know, how to take it from 100 to 1,000, and then from 1,000 to 10 grand, and then from 10 grand to 50 grand, and so on. Because, you know, like I said, when you get to that level, it's, you know, I can imagine £1 million trading account. You can sit there and be like, yeah, okay, well, I only need like 10 pips a day, you know, I've earned 50 grand. It's like, well, that's great, but for someone that's just starting trading, that doesn't help me at all.
Yeah. Now, what about how long did it take you to go from the 50K to 100?
So once so at the 50 was really when I started to make the transaction from binary to Forex. And so I realized that at that point then, when I left binary and said, I'm not trading binary anymore and I'm moving to Forex, I needed to up my account size, because obviously you've got leverage, you've got, other factors in when you're trading Forex. So what I did was got my head down and I started to slowly build up. And I gave myself realistically about 8 months. And I said to myself, I'm not going to take any money out. I've already had some savings. I said, I'm going to live off these savings. I've got enough now to pay for my bills for the next kind of year. I'm just going to slowly build it up. And then when I got to 100 grand, I was like, okay. And then I thought about taking it to the next level. I thought I'll take it to 200, I'll take it to 500. But I thought to myself, no, 100 grand, I'm making maybe 15, 20 grand a month. That's more than enough. I don't need to take it to the next level. I don't need to put myself I don't need to take bigger risks. I don't need to, I'm quite happy now with just going, okay, I'll just, what I earn over 100 grand a month, I'll take it back to 100 grand, take it out, and then repeat the process.
And have you ever thought, like now, I'm just thinking about the 100 grand, like these guys up here, City Traders Imperium, do like funded accounts where you can go through an evaluation for a few £100 and then they'll give you 100 grand account to trade on and you take the profit.
Yeah.
Have you thought about that, or does your style of trading, will that suit the restrictions and around these kind of funded challenger kind of accounts?
So I did think about doing that. So when like I said to you before the interview, that I was going to go down London, go down the institutional route, and I thought, okay, £1 million trading account, I'm sure I can handle that. But for me, the whole point, the reason why I got into trading was to give me not a better lifestyle, but just didn't want to work a day job. I wanted more relaxed. I wanted to be able to do what I want to do. And I didn't want to take that trading to that next level, because I thought to myself, I don't need to sit there and make astronomical amounts of money. It's like the fact that I'm making money from trading as it is, I'm happy. I don't need to trade £1 million account and make 200 grand a month. It's like, realistically, what am I going to do with 200 grand a month? And recently I just bought my dream car, which is a Lamborghini. And I think, okay, I'm happy. Got my new house, got my car. That is it. That's kind of where I am. Is kind of like, I wouldn't say I'm a humble trader, but you see some YouTube videos, right? And you probably met some traders that just want to go all out. And I think, yeah, fair play to you. But for me, it's just not my trading style. It's like, you spend so long learning to trade. And when you get to that level, it's like, I'm happy with that. If that's going to give me the lifestyle that I want and more, I'm fine.
Yeah, no, it's a really great approach, to be honest, because it's sort of where my mindset's at now. Like in terms of, you don't need to make 100 grand every month, to live off, even like supporting a family and having a decent life. You don't need all that money, so just trim it back to what you need. Which is
that
exactly
is it, because it is taking it to that next level. Is that it's not just, you might have the money or you might have the funding, be able to trade £1 million account, but it's the psychological, it's the emotions around it. It's a different pressure. It's a different ball game. And I think you want to be trading. If you want to trade every day, you want to enjoy it. You want to be relaxed. You don't want to be sitting there, nervous every single day thinking, Christ, because, you see some traders, I've watched many videos and they're talking about being in drawdown, 200 grand. And it's like, I couldn't sit there and be in drawdown 200 grand.
Yeah. Look, I mean, you're right. And these are sort of realistic views of what actually happens when you've got the big money on the table, which I don't actually hear that often on the show. So I'm so glad you're sharing it with us. That's fantastic, and it's really interesting to hear what you've got your thoughts on the like funded accounts and stuff. And you know, the freedom aspect of that, and not having to have that sitting over your head. Now, going into like some of the detail around your stats and stuff. So what's your winning percentage?
Well, for last year, I averaged, believe it or not, I averaged a 98. I can show you
98% winning percent.
Yeah, I'll actually show you my account history because I document it for YouTube. So I started alongside my YouTube. I have run 2 accounts, one on my YouTube channel and one kind of private, because I can't make a YouTube video while trading with my own trading account. So I trade on myself, and then I'll do a YouTube video and trade another account. And on that account, I averaged a 98, but that was a different. So as you know, I recently moved house, and prior to that, I lived on my own. And for an entire year, I just smashed trading. I did it all from my YouTube channel, and I averaged, I think, 586 trades in a year and did a 98%. Then I recently moved house. I'll show you. But then I recently moved house, and I stepped back from trading because I remember you reached out to me probably about 2 or 3 months ago.
Yeah, it was a while ago now, yeah.
Yeah, and I was like, that's when I stepped back from trading, because I was like, okay, I've done it. I've proved it. What next? And I took a few months off from trading, bought a house, bought a new car, went traveling around Canada. And I was like, okay, I've got a few savings, and only recently I've started to get back into trading. I've got a new office, new house. And yeah, so we'll see what happens with the end of this year. I'm currently sitting at around an 84%. But obviously it's a different environment. I think the environment makes a big difference to your trading.
Yeah, that's phenomenal. I wasn't expecting 98%. I don't think that anyone's coming at that high.
Listen, I didn't, right? And, but the way, and I give people advice, is that focus a lot on yourself and trading, right? Rather than focus on the money, focus on becoming better every single day, because the money will come regardless, right? If you're good at trading, the money's going to come. Right. So don't focus on the money, because you focus on the money, you're not going to ever be a trader, because in the first year, you're just going to lose it. Focus on learning. So every single day, learn something new, and then the next day implement it, and then repeat that process. And that's kind of my advice to myself and to other people, is that just focus on trading, try and get better and better and better every single day. Now
what about, like, I just want to jump back into something you mentioned earlier on, which was how you were going from like 50% to 20% to 5% with your loss if you lost a trade. Now, yeah, because in my mind, like, you've got a stop loss point, right? And you put that stop loss in, it's a line in the sand. It's pretty much the same area wherever you're going to take the trade. It's the same methodology as to where you're going to put your stop loss. So was it that you were increasing your risk to risk 20% of the account, but your stop loss was in the same point? Or did you just have a wider stop loss and you brought it forward to the point where it became 1% because you were more confident to have that tight stop loss?
Yeah. So obviously, realistically, always risk 1% on your stop loss. But no, so I kept it the same lot size, which was bad. So when I was losing a trade, I was going back 20%. But that was just the early days of kind of understanding what it's like to be consistent, because, you would I'd stick a 1%, 2% stop loss, 5, 10, 20, 30 pips. And it was just constantly hitting my stop loss. So, like most traders do, it's like, well, if I don't have a stop loss, can't lose a trade. Yeah. But then, it goes wrong and you lose your account. And I thought, okay, well, let's start at the other end. Let's blow an account, and then I will bring it forward. So it'd go from 100 to 90 to 80 to 70 to 60 the other way.
Right. Okay.
And it was a bad way of doing it. But the way my logical thinking was, if I just stick a 1% from day one, I'm not that good enough to get a perfect entry point. So why don't I just go, okay, I'll stick a 20%. If I can make 30% and I lose 20%, I've gained 10.
Right.
And then over time, I was like, I'll bring that stop loss to 10%, to 5%, And then eventually I got it to around, 2 to 3%. So I was like, okay, well, I gain 5% in the week. I'll have one loss. I've lost 2%. So I'm still up. And then obviously I did what you just mentioned as well, is starting to keep the lot size, the stop loss the same. So I'd have a 20% stop loss, a 20 pip stop loss, but then reduce the risk. So that 20 pip stop loss would become 1%.
Right. Okay. I think I'm with you. So it's almost like if you had a 20% stop loss and you made 10%, you'd have it'd literally be a half-hour trade, right?
Yeah. So,
but if you had a 1% stop loss and a 10% win, it would be a 5-hour trade. Is that right? Yeah. Okay.
We'll be 1 to 5. Yeah.
Yeah. Okay. Gotcha.
But the way I would do it was keep it simple. 20% stop loss, 100 pip take profit. But I'd always use the same lot size. And then what I would do is obviously when I was losing a trade, I'd lose 1, 2, 3, 4 trades. I'm losing a lot because my lot size didn't change. What really should be is 1% risk and then 5% reward. Right. And what I was doing was at the start, I was having like 100 pip stop loss, 100 pip take profit. Right. And I thought, hang on here. So I've got 50-50. Right. What I need to do is bring that stop loss down and that take profit bigger. And it was that kind of, that's how I would say made me a better trader, was that every time I reduced my my stop loss, is increased my take profit. So I started off here and then I was like,
oh, right. I sort of get you now. And so it was almost like your entry point changed to get closer to the stop loss.
Yeah. So when I started off, it was a 1-to-1.
Yeah.
Right. But it's like people go, but you need like a 1 to 5. It's like, but most of my trades wasn't going 5 times. They were only going 1. So it's like, okay, well, I need to bring that to more 5. So then I kind of made, as it brought me stop loss down, I increased me take profit.
Yeah.
But at the start, it wasn't like that.
So it's almost like, if I had to sum it up, it's almost like you moved your entry point closer to your stop loss, which indirectly made your profits bigger and your losses smaller.
Yeah, pretty much. Yeah.
Okay, cool. Got it.
Yeah.
Which is very, very, very unique. I've never heard that. Well,
it was just the way I kind of seen it at the time. It was like, okay, I'll make, it's like I could get my entry point and I can pick me winning trades, but it was once I'm in a trade, the problem was, because it was either my stop loss was too close and it was stopping me out. So I thought, if I move my stop loss higher up, right, I'm going to lose more money. But then I think, well, hang on here, but then it's less likely to my stop loss. But then my take profit was also terrible because when I was winning a trade, I wasn't really, gaining. So I was like, okay, I had to kind of make this kind of thing where bring my stop loss down, my take profit higher. And over time, I started to be consistent.
And do you do any trade management whilst you're in a trade?
Yeah, so I do. When it comes to trade, because I'm a scalper, I actually physically watch my trading. So most traders either use, if they're swing trading, they'll use a trading stop loss. They'll maybe close off half their position. For me, I will be, if I'm in a trade, I'm going to sit here and watch that trade. So I'll make a decision based off what I'm seeing at the time. If price is slowing down, if I'm in a trade, I'll give an example where, if I've got a 50 pip take profit and I see price starting to slow down at around 30 pips, I'll either make a decision to bring my stop loss to break even or look to close off maybe half of the position or close it all off. That's I think there's a big difference between taking a trade and managing a trade. A lot of people focus on what to do. A lot of people focus on the strategy, the entry point, but then there's a big difference between what to do once you're in a trade. It's not just fixed stop loss, fixed take profit, leave it. It's about managing it. Going back to that 98%, in reality, that would have been a lot lower, but because I was watching the charts, I was closing some trades off early. I was looking at it and going, hang on here, this could probably reverse. It could hit my stop loss. Well, I'm just going to take profit now and walk away.
Yeah, I was going to say that's probably why you got the 98%, because you are managing it on the go. Because otherwise, it's probably quite
most in truth, most of the trade, more probably around 20% would have just gone, would have reversed it the stop loss. But because I'm sitting there physically watching it, I'm closing off early and think, okay, I'll take the profit and walk away.
Now, at a guess, is your exit based on the opposite signal on your indicator?
No, it's not. So it's not from signal to signal or top band to bottom band. So when I'll show you afterwards, I have a target. So I'll take a trade and then I'll look to see where that target is. And then I'll see if that target is going to be hit. And if I feel it's not going to be hit, then I'll make a decision what I'm going to do. Should I leave the trade and see what happens? Or should I close it off or close off half the position or whatever?
Now, I've hardly got through any of these questions here, and we're already almost an hour in. What about from a trader's mindset? So you've obviously got guys going through using your indicator and taking your memberships and stuff. I mean, what do you teach people from a mindset point of view? Have you got any special hacks or tricks or something that you can share with us today?
I'd say focus on trading. I mentioned it before, focus a lot on trading. I think people need to understand that trading is a journey. It's not just a short-term thing. Okay, in your first 1 or 2 years, it's going to be a lot of losing money, a lot of disheartening. But I think if you enjoy trading, you focus on it, and you do what works for you, do what you enjoy doing. If you like trading, scalping, if you like swing trading, you like trading with indicators, you like perhaps using an EA, that's fine, right? The main thing is do what you enjoy doing. As long as you're enjoying it, that's all that matters, because the more you enjoy trading, the more you're going to put into it, the more you're going to get out of it. If you don't like trading and you're getting upset or you're frustrated, it's not, you're not going to go anywhere in trading. You're just going to go around in circles. So I think do what you enjoy doing, find a style of trading and stick to it until you get really good at it. That's my advice to people.
Now, what about thinking back to when you if you look at yourself, I mean, do you think you've got any special traits that helped you as a trader?
No, I wouldn't say I'm any different. My biggest weakness was patience and discipline, was non-existent before I traded. I was like everybody else, just blowing accounts. But I think the whole learning to trade is a journey, and you have to adapt as a person, both, mentally, because you have to your trading style has to adapt. Like for me, my trading style has been fast paced, in and out scalping. I can see that I can see the lower time frames. I can see my entry points, and I'm on it, quick. And some traders aren't. They prefer the slower, higher time frames, which is fine. But for me, that's what I've stuck at. It's what works for me. I like that. It suits my style. I like fast-paced trading.
And when did you know you'd cracked the discipline part of it?
When I started making consistent profits. I mean, when I started making profits, it was it was another roller coaster. I'll be able to stay in profit. But I learned that not every day is a winning day, because, you get home from work, you do your trading, and if you're not placing a trade, you feel like you're not doing anything. You feel like you're missing out. And it was understanding that, okay, I'm going to sit here. I'm not going to place a trade until my strategy tells me I can. And then when that happened, the amount of trades that I took massively decreased. I go from taking 30 trades a week to 10 trades a week, and out of those 10 trades, they were more consistent, more winners than there were losses. And it was then I was like, okay, well, I'm starting to learn about discipline and patience, because most traders want to take 20 trades a day. But I'd say I'd be happy with one winning trade a day. Give me one winning trade a day. I'll be happy with the rest of my life.
And what about patience? I mean, did you find there was something that you were that clicked in you around patience?
No, not really. It's just the whole trading and itself, because I'm a guy that likes to keep trading journals and I like to document my trading because I like to see where I'm improving on and see my weaknesses. Like going back to, like, for instance, currency pairs, yen pairs don't like me and I don't like yen pairs. I prefer the major pairs. So from there, I would improve. I'd stick to the major pairs. And I noticed over time that I was being more picky with my trades rather than just trade. I learned over time to be more patient. And I think if you're more patient with trading, you become, someone really told me that if you're successful at trading, you're successful at life. And I could relate to that because you change as an individual. You find that you do stuff on trading and you do the same thing in real life. Like, for instance, being patient. I'm terrible at waiting in a queue at the supermarket, right? But I learn, okay, well, I've got to be patient. I've got to learn to be like that with trading. And I've found, weirdly, I'm the same now in my everyday.
That is very weird. It's very weird. Maybe look, that's something people who are struggling with patience can try and implement somewhere else in their life.
100%. I think if you are a very unorganized person, your trading is going to be unorganized too. If you have a clean environment, that's quiet, you can focus on trading. The results will speak for themselves. You can't trade when you've got screaming kids around you, on a laptop, on a sofa. Your trading is going to be chaotic like that. But I think if you start to organize stuff, you document your trading, your journals, you keep track of what are your best currency pairs, your best time frame, what works for you, what doesn't, you will find that will go into your life. You start to organize your life a little bit better. And I find that a very weird thing. And I remember when someone told me that when you're successful at trading, you're successful in life. And I'm like, I don't even know what that means, but whatever. and then you kind of sit back and think, I'm getting a bit more organized.
Awesome. That's really, really good to hear, because I think a lot of people can relate to that. And even if they've got a completely messy trading setup, maybe it's time to clean that up and see what happens to your trading. Now, we'll go through a couple of quick fire questions here, and then we'll wrap the show up. So what about a recommended book or resource?
Book or resource? I used to follow a guy named Lewis Mocker. He used to have a company called Infinity Prosperity. He closed that company down, but he's got some great content on YouTube about understanding money and concepts and stuff like that. The whole point of trading is learning about money. And if you can understand that, you'll be able to control your trades a lot better and everything like that. So he taught me a lot about that side of things.
Okay, cool. We'll try and find something and put a link in the show notes for that. Maybe his YouTube channel. Now, what about your preferred broker?
I use IC Markets.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. And do you want to walk us through your worst ever trade?
Worst ever trade? I blew an account from it. I took a trade. And I don't even know why I took the trade. I knew when I was in the trade, it went to around, this was way years ago. This was with binary. And I took a trade and I took too much of a, position on it. It was probably about 20% of my account. And I literally just sat there. I lost the trade. I punched a hole in a wall. And then from there, I lost the entire account. I just chased my trades and blew the entire account. And because it was just out of frustration, knew what I did was wrong, and I just let it just take over.
Well, guys,
I think everyone does that.
I think you're right. And guys, the good news is, if you look at Jamie here, it can turn out for the best. Right now, last question before we leave. What's one piece of advice for the guys listening?
One bit of advice: focus on trading. Okay, I wouldn't say there's one particular YouTube video or course or anything like that will change your style of trading. I think learn a style of trading, take a course, watch a YouTube video. But the best way to get out of trading is by chart time. The difference in an experienced trader and a beginner is the amount of time they spend on the charts, not the videos or courses they've taken. The more they spend on the chart, the better you become. That's my bit of advice.
Sorry, there was one more question I forgot to ask. What do you do around trading journaling?
Trading journal. So I keep a log of every trade that I take, the top stop loss and take profit. And I just generally keep an eye on. So the way I've always done it is I always focus on becoming a better trader, looking at where my weaknesses are and how to improve on them. For example, obviously when I lived on my own, I was doing really high win ratio. Now, obviously I've moved house and I've got a kid. My trading environment's changed. So because of it, my focus has dipped a bit. So I write that down. I look at it and go, okay, well, I need to not trade yen pairs. Yen pairs, I don't like them. They don't like me. So I'll stick to my major currency pairs, and I'll look at, and I look at ways on improving it. And I think a lot of people need.
Are you physically writing down this, or have you got how are you doing it, like the actual journal?
Yeah, so I have a trading journal like this here.
Right.
And I simply write down Monday, Euro USD sales. And then what I do normally is I just post it in my group and I say, look, took the sales. These are the reasons why I've took it. This was the take profit. This was stop loss, whether it wins or loses. So yeah, like I said, I always try and improve on my trading where I can.
And how often do you go back and review your journal?
I review it I don't do it every day, probably every few months. I just sit there and look at it and I analyze where my strengths and weaknesses are, because I think if you don't do that, you don't know where you're improving. If you just look at your account balance and if you're not making money, you're failing. But what you're forgetting to realize is the amount you're learning. You might be losing money because you're trading a currency pair that is losing you money, as weirdly as that sounds, right? But if you focus on the currency pairs or the strategies that are working for you, stick at it, focus on them.
Cool. Right. Well, look, before we wrap up, what's the best way for the traders to get hold of you?
I've got a YouTube channel, The Binary Destroyer. I've got a website, www.fxlearning.com. So basically I do YouTube videos every Monday, Tuesday, Wednesday, some training, some me trading. And that's pretty much it.
Cool. Well, look, guys, a big thank you to Jamie for sharing with us today. Everything we've discussed here, along with all those links, are in the show notes. To find them, simply search for Jamie in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. All right, folks, so there you have it. Interview done and dusted with Jamie. Now, we did shoot a video where he breaks down what he does on a price chart over there on the Trading Nut YouTube channel. So please go and check that out after listening to this. And also remember, June's Trading Nut Funder Cup is now going to happen in July. More details on that to come. And also the Algo Funder Mastermind. Don't forget that that's happening next week. So if you're watching this in the future, you probably missed out. There might be ones happening again. I don't know. But anyway, guys, if you're listening to this with enough time to get on board, then please head over there, tradingnut.com, link in the description, or link, actually it's in the description, or head over to tradingnut.com and you're going to find it. It's going to be a 3-day live streamed event. We're going to have a lot of fun. We're going to come up with a trading strategy. I'm going to automate it, and we're going to try and use this to independently pass funding challenges and then withdraw from them. So it's going to be a very dynamic kind of trading algorithm that you're going to get at the end of it. All right, guys, thank you for watching, and we'll see you in the next one.